Fitz-Gerald, you're an Apple share owner. I need to get your reaction to this report that Apple is exiting its entire plan to build an Apple car.
Well, this to me is not a surprise because I thought this was the year we're going to hear Apple and AI in the same sentence for the very first time. So I think it's a precursor to a monster move. We're going to learn more about it in June. To me, this is the time to get your hands on Apple if you don't already have it or you want more.
Well, yeah, if you look at the one-week chart, we see the big spike here. Kind of missed the one-week opportunity, but when you stretch it out, it's actually, I don't want to say lagged the other Magnificent Seven because it's still year over year up about 22.5%. But yeah, when you compare that to the gains in Microsoft, to the gains in NVIDIA, which, by the way, at last point, and let me just pull this up in real time here, it's flat. NVIDIA is flat on the session, but if it gains, it's on track for its fourth record close. So you say Apple. Give me a sense, as you broaden this discussion, about the overall market and the appetite investors have for risk, considering they've had quite an appetite over the past 6 to 10 months.
You know, that's a very sharp question. Here's the thing, right? AI is not going away. But what people are beginning to realize right now, Liz, is that it's not just a question about AI as a technology. It's a question about AI as a transformative input into our world. So what we're going to see this year and the year after this is we're going to see lots of other businesses coming along for the ride. So the question isn't just about NVIDIA. It's who's using NVIDIA chips, how and why. That's where the real value is going to be created. Medical technology, for example.
Yeah, oh, well, we've talked a lot about that. I mean, Orlando Bravo, the big private equity outfit leader, has said, go into not on the surface looking AI names, but go into the healthcare that is really gaining. Let's bring in Shelby McFadden of Motley Fool. She is asset management senior analyst there. Shelby, we were just talking about Apple, specific names like that, but CRM, Salesforce, reporting earnings. You got to give me a sense of that name as an AI play.
Yeah, absolutely. I mean, first and foremost, even though they are sort of maturing a bit as a company, we do still think that there is a bit of sort of top line opportunity there. There does still, of course, remain some room for operating margin expansion. And then again, when we think about the sort of products, that's where AI can come in. That's where there's that opportunity to say, how else can they serve their customers? And where can they then cross-sell by their increased productivity with the use of AI as that sort of co-pilot? So not necessarily revolutionary, but where can AI kind of come in, enhance the products that they have, and then go ahead and sort of expand the opportunities for cross-sell.
Yeah, you know, you're still buying it if you know, it's up 84% over the past year. Shelby, would you wait for a dip?
Yeah, you know, I mean, when we sort of look at the company versus the valuation, if you're wanting to sort of enter the position for the first time, you might want to wait and look to see for a little bit more softness. But when we think about the company as a whole, it is worth sort of adding to the portfolio if you've got that long-term sort of orientation and you're willing to go along for the ride and enter at that little bit of a more richer valuation just for the exposure of something a little bit more sticky.
Oh, you gave me a good segue when you said the ride. Boy, you look at the auto names. We already showed you, Keith, about what's happening in the EV world, but you have a long short that involves two companies. Two auto companies, BYD and Ferrari. Ferrari, by the way, ticker symbol RACE, is hitting a 52-week high right now. It might be even longer, but at $423.87. You are long BYD, the Chinese outfit that just came out with a luxury EV. You're short RACE. Tell me how you came up with this and why.
Absolutely. So this is called a pairs trade. It involves taking on two sets of stocks at the same time, one of which you want to own, one of which you want to avoid or short. So to me, Ferrari is getting ahead of itself. China is coming. Now, I may be totally early to the party here on this one. I think BYD, which has global aspirations to sell starting in Europe and particularly in the Middle East, may actually steal some of Ferrari's thunder. Perhaps not immediately, but this is very much the playbook we saw with Toyota in the late 60s, early 70s. It's when people thought Detroit was absolutely unassailable. I see a repeat.
Okay. I'd be remiss if I didn't bring up an economic data point that we got today, Shelby. Durable goods. And durable goods came in. These are sales of big ticket items that last between 3 to 5 years or longer, we hope. Washing machines, cars, etc. They actually came in a little bit lower than expected. The estimate for January year over year was a drop of 4.5%, came in down 6.1%. It doesn't worry the markets. They look at this as a signal that the Fed has some air cover about cutting rates a little bit sooner. But how do you see it?
Yeah, I think I'd broadly have to agree there, because when we think about it, when we think about the comps, we know that the comps are a little bit enhanced based off of the fact that consumers were still working through that extra savings, starting to tap into credit cards, whether that be store cards or standard cards, and going ahead and improving things around their homes. Now that we're getting into 2024, that sort of propensity to consume those durable goods is beginning to come down. And I think the market just recognizes that as normal, as one, getting out of that extra savings, and two, realizing that financing any sort of these durable goods purchases is more expensive now, with rates being higher and credit conditions being tighter. So I think the market just recognizes it as sort of par the course. Anything further, double-digit drops might be a little bit different.
Yeah, it's definitely still a soft landing picture, at least. Shelby, Keith, great to have you. Appreciate you being here.
Thanks.
Thank you so much.
Thank
Anchors away. One shopping mall anchor store revealed